In a move that sent ripples through the global financial community, UBS agreed to pay a staggering $511 million to US authorities. This hefty sum was not for any wrongdoing by UBS itself, but rather to settle a criminal investigation into the actions of Credit Suisse, a bank it acquired in 2023. The investigation revealed a deeply troubling pattern of behavior by Credit Suisse, one that struck at the heart of the US tax system. For years, Credit Suisse had systematically conspired to help wealthy American clients evade taxes, hiding billions of dollars in offshore accounts. This settlement served as a stark reminder of the consequences of corporate misconduct. It underscored the importance of compliance and transparency in the banking sector, particularly when it comes to international tax laws. The case also highlighted the long arm of US law enforcement, which has shown a relentless determination to pursue financial institutions that facilitate tax evasion, no matter where they are located. The UBS settlement is just the latest chapter in a long and troubled saga for Credit Suisse. The bank has been plagued by scandals in recent years, ranging from money laundering to data privacy breaches. These scandals have not only tarnished the bank's reputation, but also cost it billions of dollars in fines and settlements. The UBS acquisition was seen by many as a rescue mission, a chance to salvage what was left of Credit Suisse's once storied franchise. However, the tax evasion settlement is a stark reminder that UBS has inherited more than just Credit Suisse's assets. It has also taken on its liabilities. The settlement is likely to reignite concerns about UBS's ability to effectively integrate Credit Suisse and manage the legal and reputational risks associated with its troubled past. Credit Suisse, a once venerable institution with a history dating back to the 19th century, became embroiled in a scandal that shook its foundations. The bank was accused of a brazen scheme to help wealthy Americans evade taxes. This scheme involved hiding billions of dollars in offshore accounts, shielding these assets from the prying eyes of the Internal Revenue Service, or IRS. Credit Suisse bankers, motivated by greed and a culture of impunity, went to extraordinary lengths to facilitate this tax evasion. They established secret accounts, created shell companies, and used coded language to conceal the true nature of their clients' transactions. These clients, many of whom were high net worth individuals with complex financial affairs, sought to minimize their tax liabilities by stashing their wealth in offshore havens. The bank's actions were not only unethical, but also illegal. They undermined the integrity of the US tax system, depriving the government of billions of dollars in revenue. This lost revenue could have been used to fund essential public services, such as education, healthcare, and infrastructure. Instead, it was siphoned off to offshore accounts, enriching tax dodgers and lining the pockets of complicit bankers. The Credit Suisse tax evasion scandal is a stark illustration of the dangers of unchecked greed and the erosion of ethical standards in the financial industry. It is a story of how a culture of secrecy and a willingness to bend the rules can lead to widespread wrongdoing. The scandal serves as a cautionary tale for other financial institutions, highlighting the importance of robust compliance programs, a strong ethical compass, and a commitment to transparency. Credit Suisse's tax evasion practices did not go unnoticed. The bank became embroiled in a series of legal battles and faced hefty fines for its misconduct. The US Department of Justice, or DOJ, determined to hold the bank accountable, launched a full-scale investigation into its activities. The DOJ's investigation revealed a pattern of systematic and deliberate tax evasion by Credit Suisse. The bank had knowingly and willingly facilitated tax evasion for its American clients, helping them hide billions of dollars in offshore accounts. This was not a case of a few rogue employees acting independently. Rather, it was a systemic problem that permeated the bank's culture. As a result of its investigation, the DOJ hit Credit Suisse with a series of fines and penalties. In 2014, the bank agreed to pay a then-record $2.6 billion to settle charges that it had helped American clients evade taxes. This settlement was hailed as a major victory for the DOJ, sending a strong message to other banks that tax evasion would not be tolerated. However, Credit Suisse's legal troubles did not end there. The bank continued to face scrutiny from regulators and law enforcement agencies around the world. It was fined for violating sanctions engaging in money laundering, and manipulating financial markets. These scandals tarnished the bank's reputation and eroded investor confidence. The constant stream of negative headlines and legal battles took a toll on Credit Suisse's bottom line. The bank's profits dwindled, its share price plummeted, and its once sterling reputation lay in tatters. The acquisition of Credit Suisse by UBS in 2023 was a landmark event in the banking industry. It marked the end of an era for Credit Suisse, a bank that had once been a symbol of Swiss banking prowess, but had fallen from grace in recent years. For UBS, the acquisition presented both opportunities and challenges. On the one hand, the acquisition allowed UBS to significantly expand its global reach and enhance its wealth management capabilities. Credit Suisse's client base and geographic footprint complemented UBS's existing strengths. The deal also provided UBS with access to Credit Suisse's talented workforce, albeit one that had been through a tumultuous period. On the other hand, UBS knew it was inheriting a bank with a troubled past. Credit Suisse's legacy of legal and compliance issues could not be ignored. The tax evasion scandal and the subsequent $511 million settlement served as a stark reminder of the potential liabilities that UBS had assumed. In the wake of the acquisition, UBS has taken steps to address Credit Suisse's legacy issues and enhance its own compliance and risk management practices. The bank has pledged to cooperate fully with regulators, strengthen its internal controls, and foster a culture of compliance. UBS has also made it clear that it will not tolerate any wrongdoing by its employees and that it is committed to upholding the highest ethical standards. The UBS Credit Suisse merger is a case study in the complexities of integrating two large financial institutions with different cultures and risk profiles. It underscores the importance of robust due diligence, effective post-merger integration, and a proactive approach to managing legal and reputational risks.